What's the point in having a beautiful website if it doesn't attract the clients you want to see? As the worldwide leaders of website design for therapists, Brighter Vision sees this issue happen all too often. A nice-looking website doesn't equate to a successful website, and the truth is your current website might even be turning off potential clients. That's where Brighter Vision comes in. Brighter Vision and its team of website designers will create you a website that is centered around attracting and retaining your ideal client so that you can have a nice-looking website as well as a successful one. So for a month free, head on over to brightervision.com/Gordon. Again, that's brightervision.com/GORDON. Go check them out today. This is the Practice of Therapy podcast with Gordon Brewer, helping you to navigate your private practice journey. This is session number 82 of the Practice of Therapy podcast. Hello, everyone. I'm Gordon Brewer, and I'm so glad you've joined me for the podcast. I know you've got a lot of choices to listen to different podcasts out there, but I'm just honored and grateful that you've chosen to listen to this one. And there's a lot of good ones out there, and a lot of them that I listen to out there as well that I can really recommend. But anyway, I know you've just got a choice, and I'm glad you chose this one. I'm so glad you joined me today because today is going to be a great episode. I've got my guest coming up, Julie Harris. And Julie is an accountant, and she has an accounting firm that just specializes in working with therapists. And we ran into each other online, and so I got her on the podcast. And what's exciting is we're going to be doing some collaborating on some things, which I just can't wait for you to hear from her. But we'll get to her in just a minute. This morning, as I'm recording this, it's on a Thursday. And one of the things that I'm just so grateful for is to be able to do the job that I'm doing and being in this career of helping people, but also being a private practice owner is just something that just comes with so many perks that I think a lot of times we can tend to take for granted. The way I've got my schedule for the summer is that I'm only seeing clients in the afternoons. That's just the way I chose to do that, and it's a great thing. And I also take Fridays off. I don't see any clients on Fridays. And so this morning I was out mowing because it's supposed to rain tonight. And so I wanted to get the mowing done before it rained. But was just listening to some great podcasts. One is Marissa Lawson's podcast, and she was on last week's episode. And I would really recommend you go take a look at her podcast. But it's called the Empathy Rising podcast. And I think we had that in the show notes for last week's podcast, but started listening to it today. She is really good. And so another shout out to Marissa Lawton. And I'm sorry, Marissa, I keep getting your last name incorrect. I guess it's just my southern tongue tries to say it as an S instead of a T. So, but anyway, take a listen to that. It's a great one that I would recommend to you. Another thing I want to mention that I'm excited that's upcoming in October, and I've mentioned it on a few other episodes, is the Killing It Camp with Joe Sanok. And it's on my mind today because I just bought my plane tickets to go to Colorado. It starts on October 20th. And if you're listening to this depending on when you're listening to the podcast, I would say go ahead and sign up for that because it's going to sell out fast. And you're going to get to hear just some wonderful, wonderful speakers just talking about all different subjects. And a lot of those people I've had as guests on the podcast here. There's Katie Englert and Cecilia Brasino, Laura Long is going to be there, Perry Rosenblum from Brighter Visions. and just Megan Warner, Dr. Megan Warner is going to be there. But Joe is just really putting together this awesome thing. And I just would recommend that you take a look at it and join us out there. I'd love to meet you in person and just be able to sit around and have a conversation. I just love being able to do that. So if you'll go over to killingatcamp.com, you can find out more about that. And, of course, we'll have links to that in the show notes as well. But another thing that's coming up, another event that I want to make mention of, and this is particularly for people that are in Tennessee or maybe close to Tennessee, but we'd love for you to fly in too. But the Tennessee Marriage and Family Therapy Association, which I had to step down from being on the board of that just because of all the family things that were going on for me with my wife breaking her ankle and then my dad, us moving him into assisted living. I just had to take that one thing off our plate. But my friend, Dr. David Hall, and David was on the earlier podcast episodes, and you can go back. I think it was episode number 4, but I'm going to have David back on here soon because he's a fascinating guy and just a really good friend of mine. And we're going to be doing being co-presenters at a conference that's being sponsored by the Tennessee Marriage and Family Therapy Association. And there's 2 parts of it. There you've got 2 choices, one in East Tennessee, which will be in Knoxville, Tennessee, and then the other one will be later in December in Memphis, Tennessee. But the East Tennessee one is in August, and let me make sure I've got the dates correct here. Yeah, it will be Saturday, August 3rd, and it will be in Knoxville, Tennessee. And we're going to be talking about the world of private practice, and we're just going to be talking about business structure, marketing, and then also ethics. And with this conference, you can get 3 continuing education credits. So anyway, just want to let you know about that. Again, I'll have links in the show notes, the show summary about that. And I'm looking forward to David coming on the podcast again. He's another person that has gotten into private practice consulting like I have, but David also has something called the Narrative Institute, and he does a lot of clinical training through that as well. But we're doing some collaborating on putting some courses together, and in particular, we're gonna be piggybacking on with each other on that. So anyway, shout out to my friend David Hall, and just keep your ear out for that. But if you'd like to be interested in coming hear me speak and David speak, got an opportunity in August, and then the one in Memphis, Tennessee will be December the 6th. So that's a good ways out. But anyway, just wanted to make mention of all of that. So that was a lot. And anyway, I'm so glad you joined me for this episode. And I'm so glad again to have Julie Harris with me. And so without further ado, here's my friend Julie Harris. Well, hello, everyone, and welcome again to the Practice of Therapy podcast. And I'm so excited to have with me another new friend, Julie Harris. And I was so excited when Julie reached out to me because what she is doing has been, as many of you know, I've been working on this Money Matters for Private Practice course that is now out, and all the content is up. But Julie is an accountant and bookkeeper specifically for therapists. So, Julie, I'm so glad to have you on the podcast.
Hi, Gordon. Thanks for having me.
Yes, and so tell folks a little bit about you and how you've kind of landed in this niche of working with those of us that are therapists and clinical types and that sort of thing.
Sure, I'd love to. So I am the founder of Green Oak Accounting, and we're a team of 7 now. We do bookkeeping, accounting, CFO services, payroll, the whole accounting realm for mental health private practices throughout the United States. So how we first started in this, in this niche years ago, when I first started, we had our first therapist, and started working with him and learning about his business. And when you do good work, you get referrals. So we started getting more and more referrals in this space. And then with time, we're working with so many people in private practice that we started really seeing some trends in the successful businesses. So I started really looking into that, and then that became the focus of our business. There's really some noticeable trends that successful practices, things that successful practices do, and so now that's who we specifically have focused our work on.
Wow. Yeah. And I've been so excited about having you on the podcast, because I know from what I read on your website and all of that, you've really put a lot of work into looking at what are those just kind of benchmarks for those of us in private practice. And most of my listeners kind of know I kind of geek out over the numbers a little bit, but I know, as we were talking about before we started, that looking at the numbers and looking at the whole accounting, bookkeeping side of things is really kind of intimidating to a lot of therapists, and they really don't like that kind of stuff. So what have you learned, and what are some of the mistakes maybe people make and that sort of thing that we can learn from?
Yeah, so what we learned early on is that there was a whole lot of anxiety around the accounting and the bookkeeping for therapists. And that's really somewhere where we could come in and take a nice chunk off of their plate and really give them some confidence in what they were doing. And we know that most therapists don't have any accounting education in their formal education. So that was just an area that made them really nervous. So over the years, there's a couple of big lessons that we've learned, and I wanted to share today a couple of some of the big mistakes that we see over and over again, so that you can hopefully, or your listeners can avoid them.
Right. That's great. So let us have them.
Yeah, so the first one would really be not knowing your numbers. And I know that's something that you're really passionate about since you've put out Money Matters in Private Practice. But not knowing the numbers really is a way of avoiding the reality of the business sometimes. And so it's really key to know some high-level things like how much are you bringing in each month? What is your overhead? How much are your variable costs? And also, like, how much do you need to take home at the end of the month to support your family? A lot of people go in not knowing any of those numbers. So you're just kind of taking out what you need when you need it, and at the detriment sometimes of the business itself.
Right.
And so a lot of people do what I like to call, bank balance bookkeeping, where they won't actually put anything down, write anything down. They'll just look at their bank balance. And if there's enough money, then that's kind of good enough. But there's a lot of information that's left on the table if you don't do any kind of bookkeeping until the end of the year.
Right. So, I think that's, I think a lot of times people are just really intimidated by looking at the numbers. And I know that for some folks, and I know I was this way for a while, is it's kind of like, getting on the scale. I just don't want to know.
No, that's true.
Yeah.
There's so much power though. And I'll just give you a really simple example, in knowing what your numbers are, right? So if you know, for example, just what your advertising numbers are, how much are you spending on advertising? You can do kind of a back of the napkin calculation on, how much does it cost me to bring in a new patient into my practice? Mm-hmm. And so when you're having discussions about payroll, for example, recently I was working with someone who was bringing on a new team member who was provisionally licensed and was a friend of a current employee. So the owner was thinking that she wanted to bring in this new person at a much lower rate than she had started people in the past, but there wasn't really any context that she could provide. She was nervous about having that discussion. So what we did is we looked at the stats. The numbers tell a story. And so what we realized is that someone who's fully licensed and experienced in her practice, they're direct pay only, will normally see a patient about 11 times before they move on. Whereas her numbers also show that someone who's provisionally licensed, they normally saw someone just under four visits was the average. And so when you know, how much does it cost me to bring in a new client? How many visits on average is this person going to see someone? Then you can frame that discussion about payroll and explain this is why you're starting at this rate, because I know I'm going to need to provide you more new patients, and there's a cost to that. So you can frame those discussions that so they're not emotional. They're really just based on data.
Right. Yeah. Wow. That's I love that mindset. Yeah, because one of the things that I mentioned in the course is really, especially for those of us that are on insurance panels, that what we get per session is kind of a moving target to some degree, but it's real helpful to know what your average is so that you can base some solid numbers off of that.
Right.
Yeah. So what are some other things that you've really kind of noticed as mistakes for therapists?
Sure. Yeah. So interestingly enough, one of the things that we see a lot is people aren't spending enough. And that's kind of the opposite of what they think I'm going to say. Everyone thinks I'm going to say you're spending too much, you need to rein it in. And sometimes that is the case, but for example, like when you're starting, it really is important to bootstrap it, right? You just do whatever you need to do to get the practice up and running, like put a website up, do what you need to do. But there really comes this tipping point where it makes sense for you to start outsourcing things. At the beginning, you have more time than money, and then there comes a point where that flips. So if you're having to turn away patients because you're too busy, updating your website or answering your inquiries, like answering the phone, it's time to outsource those things. Like get yourself a virtual assistant so that they can work 5-10 hours a week at $20 an hour, and you're going out and making $100 to $200 in that time. Like spend the money to get some experts in to do what they're best at, and you do what you're best at. So I love it when you have kind of a mental list of the things that you either don't want to do or are not very good at, and those should really be the first things that get outsourced as soon as there's money to do it.
Right. And what happens, and what I've noticed for myself, is you really end up being much more profitable because you're spending money on those things. Because exactly. If we're not, for those of us that are therapists, if you're not sitting in a session with a client, you're not making money. And so you've got to, if you can outsource those things and free up that time for you to see clients, it's much more lucrative to do that.
Yeah. And obviously, the bookkeeping tends to be a chunk that is, most therapists don't like that. So that's one chunk that they want to outsource. But there's other things like answering inquiry emails, like the website, where it's going to take someone a lot less time to do it than you. If you're doing this stuff on a Saturday morning and it's stressing you out, then you can stop. And it's okay to do that, because it frees you up for what you're good at.
Yes.
And the other side of also not spending enough money is if you're so focused sometimes on the dollar amount that you can't see the forest through the trees. And one of the things I see most is an EHR. It costs some money, and people are worried about, well, should I just keep using my Google Calendar? And I know you have a great course on G Suite, but there comes a point where you need to think about, where do you want to be in 12 months?
Right.
So you want to have your 3 therapists working for you, and it's time to invest. Spend the money now setting up your system so that you're not cobbling things together when you have a big team. Right.
Yeah. And I hopefully people have understood from me that G Suite is really a tool that augments what you do, but it does not take the place of a good electronic health record system.
Right, right. And I know you had Brad on the podcast a couple of weeks ago.
Yes.
He was talking about if the reminder alone saves you one cancellation, that paid for the EHR, the for the reminder. So kind of seeing the big picture is important, especially when you're a place of growth. If you're a small practice and you want to keep it that way, that's great. But if you're in a place of growth, kind of looking at the big picture is important, and it's worth spending some money on as well.
Yeah, and it's again, Julie, you're just echoing what I say all along. You really need to look at the return on the investment in terms of both your investment of time and money, of looking at what that brings to you.
Yeah, another area is when you're going out and looking at space to rent, like that's a good time to have that conversation with yourself. Where do you want to be in 6, 12, 36 months? Because these leases are typically long. So if you want to be a group practice, like set yourself up for success there, and you can sublet some of your space. Like you can kind of figure out how to do it now so that you have that room for growth, or maybe get a shorter lease so that you can move in a year or 2 years. So there's a lot of ways to look at this, but sometimes cheaper is not always better. And that's kind of the lesson here.
Right. So what are some, I know you had just really kind of a list of things that you see therapists doing that they could really improve on, or other mistakes that they might tend to make. What are some of those others that you've noticed?
Yeah. So another one, and this is a big one, paying your first hire too much. That's a mistake I see over and over and over again. And typically the story goes something like, you've gotten to a point where you're overwhelmed, you're seeing too many patients, you have a wait list. And so you say, okay, I need to hire. And you look at your overhead, usually at that point, you say, well, I don't need to get a bigger space. They can come in my space. I don't really need to get any systems. I don't need to get necessarily an admin if I'm hiring one person. So you make them an offer that's typically too much because it's not scalable. So if you were to scale that times 10, you would need a bigger space. You would need an admin. You would need you definitely an EHR, probably a bill or a billing solution, and that hasn't been taken into account in your calculation initially. So that leads to some really difficult conversations later on, right?
Yeah, it does, and I'll tell you, folks, just that was something I learned the hard way. When I first brought on other therapists with my practice, I was very generous with them, which I felt good about being generous, but it really wasn't sustainable in the long run. It ended up costing me more, in the long run. And again, echoing what Julie's saying, if you know your numbers well, then you'll know that on the front end.
And your payroll in a group practice is going to be the biggest expense that you have. And so that's why we do a lot of work around compensation, because it is the biggest expense, right? Where if you get to a point where the practice is big enough where you want to start offering benefits like health insurance or 401k, there's a cost to that as well. So if you have some wiggle room, then you can add on that type of benefits. But it's just a difficult situation. When we have a lot of practices that come to us because they feel like they're making a lot of money, but there's nothing left at the end of the month. And it's typically related to that area of their business. So we do a lot of work to just kind of help identify. And once you have that aha moment where you realize hopefully you're not, but some people are losing money for each session. But at least once you have that information, then you can do something about it. And there's a lot of power in that.
Right. Yeah, it is. And sometimes, unfortunately, it means starting from scratch with your people. Hopefully, I just know of people that have run into that when they've had to change what they compensate their people, and then later have to kind of start over because they were essentially having to reduce what they paid their clinicians. So Brilliant point there, Julie. Don't start too high with that.
Yeah, know where you are and start at a point that's sustainable. So another situation that I encountered just recently is a practice that wanted, they had a lot of therapists who had been with them for a long time, and they wanted to give raises across the board, but they had started everyone so high. There was no room. The practice was making money because it was so large. But there was just very, very little wiggle room. So they couldn't give any raises. They could give bonuses as a one-time thing, but there just really wasn't any room for a permanent raise. And that's unfortunate when, because then people start getting dissatisfied at that point, whereas they were happy on the front end, but then when there's no room for them to grow anymore, you have some retention issues there as well.
Right. Yeah. So are there any other things that stand out for you in terms of mistakes that people typically make? Because if you haven't, sorry for me jumping around here, but I know, Julie, you had on your, you had like 3 things that you had mentioned. So let me just kind of go back and review. Is don't hide from your numbers and know your numbers.
Know your numbers.
And then the second one was being able.
Don't be afraid to spend some money.
Yes, being able to know when you're know when it's time to spend money. And then the third one was just when you bring on people, don't set the bar too high in terms of compensation. So, yeah,
that's exactly it.
Yeah. So that's those are great points. So if it's okay, let's shift gears a little bit.
Sure.
Because most of my listeners know that I'm a big fan of the book Profit First, and I know that's also something that you're a big fan of too, is Julie. And
I am.
And so you've done a little bit of research around that. I will say, folks, go back and listen to. I've done a few other podcasts around this topic, so go back and look at those. I'll try to put in the show notes links to those previous podcast episodes. 2 of which were with Mike Michalowicz and Casey Compton, who are 2 people. Of course, Mike is the author of Profit First, but Casey is a person that really kind of introduced me to the whole concept. And Casey has a multi-million-dollar practice in Kentucky, a very large practice. I think she's got like 85 clinicians working for her. So it's just a huge thing. But so without rambling too much, Julie, talk a little bit about Profit First and how you help people kind of implement that and why you see it as such a great thing for clinicians.
So I love the framework that Mike Michalowicz put together. I think it's a perfect way to have some control over your numbers. So what we do a lot of Profit First implementation. We've developed something that's very, very similar to the percentages in Profit First. We call them success ratios. And so generally with most of our clients, we're going to split expenses into 4 main categories. And our success ratios are based on those. So we're looking at overhead, administrative pay, salaries for your therapist, and then owner's pay. So it's just slightly different. But then, there's also room for a tax account, a profit account, and then OPEX would fall in overhead and administrative pay. So we can use both frameworks together, and those work really, really well. Right.
So one of the things that Mike talks about is identifying or really kind of looking at your current allocation percentages. He calls that the cap, and then moving towards your TAP, which is your target allocation percentages. So what have you, in all the therapists that you've worked with, what are you noticing as the typical TAP? What sort of range should people typically try to shoot for?
And what I've noticed, Gordon, is there's a big difference between solo practitioners and group practices. So we have completely different ratios for those two. And then there's a slight tweak between an insurance-based practice and private pay.
Okay.
So
awesome.
That's why there's some variance, because they're not exactly the same, right?
Mm-hmm.
So for a solo practitioner, we're generally going to see the overhead be somewhere between 20 to 40%. That's a normal ratio. Administrative pay would be anywhere from 0% if you don't have any admin help, all the way to 10%. So if you had perhaps a part-time person. Mm-hmm. And then that means that the owner's pay, and that owner's pay is going to, it can be sometimes an expense depending on the structure of the business. If it's an S Corp, a C Corp, it would be an expense. Otherwise, it could be a distribution. Mm-hmm. But that's generally going to be around the 50% mark.
Okay.
For a solo practitioner. Like, that's an ideal, healthy practice.
Okay. So what about with group practices? And I guess it's going to vary depending on the number of employees you have.
It varies a lot more, but generally, so what we've noticed is that for, again, like financially very stable practices, generally therapist pay is going to be in the 50 to 55% range, ideally, sometimes all the way up to 60%. And that's typically more insurance-based practices.
Okay.
They're going to be closer to the 60%. Then you have overhead that's going to be around 15 to 25%. And overhead is going to be a lot of the kind of other stuff like rent, marketing, continuing education. A lot of those items are going to fall in there. And then administrative pay, which is your admin help or billing. And that's typically going to be around the 5 to 10% for group practice.
Okay. Yeah.
So in that ideal world, that would leave room in a group practice for both owner's pay and profit, those two together, usually around the 15 to 30% is an ideal ratio.
Okay, good. That was something I was just really curious about, and makes me kind of feel better just to think without going in and crunching the numbers, feeling better about the status of my own practice being in those ranges. So that's good. Yeah.
And that doesn't mean that you can't have more than 30%. Like, I've seen some practices in the 40s, but if you're a group practice and running about a 7% owner's pay and profit, those numbers are really tight. It doesn't take much to get in trouble and need a line of credit or a loan or something can happen really easily. And so in the profit first framework, one thing we do a lot is help owners with elimination of debt. So when they come in and you say, I think I don't know what I'm doing, but I had to take out a loan to make payroll last month. So we really work on kind of adjusting those ratios back, and then a solid plan for eliminating that debt. Because when you have a plan, you just feel a lot more in control. And you know your date, when that money is going to be paid back and that things are going to get better. Right.
Wow, Julie, I know we're going to, as we talked about before we started recording the podcast, we're going to spend a lot more time and just dig into this with more detail. And my hope is that we're going to include this in the Money Matters for Private Practice course. So again, people can get more detail about all this stuff. And as people know, I kind of geek out about all this stuff. And hopefully for most of you listening, that your eyes aren't glazing over too much and listening to this stuff. So, well, Julie, I want to be respectful of your time, but tell folks how they can get in touch with you, and maybe just real quickly, if they were to start to work with you, what that process would look like and how that goes.
Sure. So feel free to visit our website. That's greenoakaccounting.com. And feel free to sign up for our newsletter on our website or schedule a free call with us where we can do an assessment and just there's no obligation. We'll talk about your process and how you're set up and if it makes sense for us to work together if you need help. And we go from there. And we really try to make it as painless as possible. We've got a phenomenal team here, and we'll get you squared away in no time.
Right. And we'll have that information in our show summary, show notes, and that sort of thing. So, well, Julie, I am so glad we got to know each other, and I'm so glad to have had you on the podcast. And I look forward to having more conversations with you here in the future. I think this is such important information for therapists, because I think as people hear from me all the time, we spend a lot of time getting our education and learning the clinical side of things, but the business side of things is something that most of us have to learn the hard way. And I'm so glad there are people like you out there that are working with us therapists to make our practices profitable and lucrative and really be successful from a business standpoint.
Well, thanks so much for having me, Gordon. I really look forward to working with you on other projects.
Sure. Sounds great. Take care.
Take care.
Well, I am so thankful to Julie for joining me in this episode. I just learned so much from her. And what's great is I like being able to find accountants that kind of verify what I've learned along the way. And it's great to be able to hear from her just about profit first and about not spending money in the right way. I mean, there comes a time in your practice when you really need to spend some money, but also just looking at when you start a group practice about how to pay people something that is fair, but also is not going to hurt you and in the business that you're in. So there was just and the other thing, just with the profit first, and I'm sure Julie and I are going to be doing some more with this, and I know that one of the plans I have is to add some bonus material to the Money Matters and Private Practice course, and with Julie's lead, and just talking more about profit first and how to set your percentages. This is kind of profit first lingo, but your tap and and understanding your cap, and then setting your tap, which is just the current allocation percentages, which is the cap, and then the targeted allocation percentages. I know that's real kind of accounting geeky stuff, but it's so important to know all this. And that's one of the reasons I wanted Julie to be on here, because she talked about some of those mistakes that people make, is that they really don't know their numbers, and it's a place that causes people to fail in their practice, and that's one thing I don't want you to do. And I think so it's the other thing that we talked about is just lifestyle and how important that is, of really determining what's the right size practice for you. I mean, you get to determine that as a private practice owner. So a lot of great stuff in this episode. And again, I'm so happy that Julie joined me for this episode. Do go take a look at our sponsor for this episode. And as a matter of fact, they're our sponsor through June and July, and that's Brighter Vision. And if you'll go over to brightervision.com/Gordon, you can get 1 month free of their services. So go take a look at them today. I'm so glad to be partnering with Perry and his team and all of those great people over at Brighter Vision. So take a look at that. Also, to check out those upcoming events, Killing It Camp, and then also the Tennessee Marriage and Family Therapy Association workshops that yours truly will be part of those. And so be a great place those places be a great place for us to connect in person. And one thing I'll mention here at the end is that one of the things that I'm always doing is looking for podcast guests. And if you think you might want to be on this podcast, if you'll go over to the website, practiceoftherapy.com/podcasts, you can fill out an application there to be on the podcast. I'd love if you've got a particular area that you have learned from that you'd like to share with others dealing with private practice or just being in business for yourself. I'd love to hear from you, and we can talk about being on the podcast. The other thing I've got an idea about is just doing some segments called Ask Gordon, and gives me a way to kind of give some coaching and doing that and sharing it with others along the way. So if you'd be interested in doing that, just mention that when you fill out that application. If there's a particular problem you're working on that you'd like some help with, and we could just have a conversation and turn it into a podcast. And that's another great way to share with folks. Finally, as I mentioned, there in the podcast that the Money Matters in Private Practice course is now fully available. And so you can go find that at practiceoftherapy.com/money matters and take a look at that course. And in that course, I teach you a lot of the stuff with that Julie and I just talked about here in this episode. So I commend that to you. So, well, folks, thanks again for joining me for this episode of the Practice of Therapy podcast. Do take time to subscribe to the podcast wherever you might listen to it, whatever platform you use. So, and give us a rating, and also leave us some feedback or give us a review. I'd love to get those reviews as well. So take care, folks. Enjoy the start of June. It's hard to believe it's already June. So enjoy your summer as we get into the summer. Take care, have fun, and we'll talk to you next week. Been listening to the Practice of Therapy podcast with Gordon Brewer. Please visit us at practiceoftherapy.com for more information, resources, and tools to help you in starting, building, and growing your private practice. And if you haven't done so already, please sign up to receive the free private practice startup guide at practiceoftherapy.com. The information in this podcast is intended to be accurate and authoritative concerning the subject matter covered. It is given with the understanding that neither the hosts, guests, or producers are rendering legal, accounting, or clinical advice. If you need a professional, you should find the right person for that.